Most people think the next trillion-dollar opportunity will look obvious. They imagine some futuristic invention appearing overnight, everyone instantly recognizing its value, and fortunes being made immediately. But history never works that way. The technologies that reshape the world usually begin quietly, misunderstood by the public, and ignored by most investors. Personal computers once seemed unnecessary. The internet looked like a niche experiment. Smartphones were dismissed as expensive gadgets. Artificial intelligence was called overhyped 4 years before it exploded into mainstream adoption. And now, another transformation is beginning to unfold behind the scenes, one that could eventually redefine industries, economies, and global power itself. That transformation is quantum computing. Quantum computing is not just a faster version of today's computers. It represents an entirely different way of solving problems. Traditional computers rely on bits, which exist as either a 0 or a 1. Every app, website, game, and financial transaction operates on that simple binary system. Quantum computers, however, use qubits, and qubits follow the strange rules of quantum physics. Unlike normal bits, qubits can exist in multiple states at the same time through something called superposition. They can also become entangled, meaning two qubits can remain connected regardless of distance. These properties allow quantum computers to process enormous numbers of possibilities simultaneously rather than one after another. In theory, problems that would take classical supercomputers thousands of years could potentially be solved in minutes. That level of power has massive implications. Quantum computing is not about making your phone load apps slightly faster. It is about solving problems that are currently impossible. Pharmaceutical companies could simulate molecules with incredible precision, leading to faster drug discoveries and personalized medicine. Financial institutions could optimize risk management and portfolio strategies at levels beyond today's systems. Logistics companies could redesign global supply chains in real time, saving billions in fuel, transportation, and operational costs. Artificial intelligence could become dramatically more powerful with quantum-enhanced algorithms. Even cybersecurity may be completely transformed because sufficiently advanced quantum systems could break current encryption methods that protect banking systems, government networks, and online communication. What makes this moment fascinating is that quantum computing still feels distant to most people. The majority of the public either does not understand it or assumes it belongs in science fiction. That uncertainty is exactly what creates opportunity. The biggest wealth transfers in history rarely happen after everyone agrees something is important. By then, much of the upside is already gone. The real gains happen during the early stages when the technology is still complex, risky, and underestimated. Right now, quantum computing sits in that exact position. But there is a reason quantum computing has taken decades to develop. Building a functioning quantum computer is incredibly difficult. Qubits are fragile. Tiny disturbances such as heat, vibrations, or electromagnetic interference can destroy their quantum state. This issue, known as decoherence, is one of the biggest challenges facing the industry. To reduce errors, many quantum systems must operate at temperatures colder than outer space. Engineers are working to stabilize qubits, improve accuracy, and scale systems to larger sizes. Progress has been slow, but recent breakthroughs suggest the industry is advancing faster than many expected. Governments understand how important this technology could become. Countries around the world are investing billions into quantum research because they know leadership in this field may shape future economic and military power. The United States, China, and members of the European Union are all racing to gain an advantage. Quantum technology could influence everything from artificial intelligence to national security. This global competition is accelerating innovation and increasing funding across the entire sector. At the same time, major corporations are becoming deeply involved. Tech giants are investing heavily in quantum research because they recognize its long-term potential. Cloud computing companies are already integrating quantum access into their platforms, allowing businesses and researchers to experiment with quantum systems remotely. Instead of replacing classical computers entirely, many experts believe the future will involve hybrid computing, where traditional processors and quantum processors work together. Classical systems will manage certain tasks, while quantum machines handle specialized calculations. This hybrid model could become the foundation of future computing infrastructure. One company attracting enormous attention in this space is IonQ. IonQ focuses on trapped ion technology, which many researchers consider one of the most promising approaches to quantum computing. Instead of relying on superconducting circuits, IonQ uses electrically charged atoms controlled by lasers. The advantage of this system is stability. Trapped ion qubits tend to maintain coherence longer and achieve high levels of accuracy. In quantum computing, reducing errors is critical because even small inaccuracies can ruin calculations. IonQ has also focused heavily on accessibility. The company has partnered with major cloud platforms, making its quantum systems available to developers and businesses worldwide. That strategy matters because widespread access encourages experimentation and adoption. Throughout history, technologies that became easy to access often experienced explosive growth. Personal computers became dominant because people could actually use them. The internet expanded because access improved. Cloud-based quantum computing could follow a similar path. However, investing in IonQ comes with significant risks. The company is still in the early stages of commercialization and remains unprofitable. Revenue growth has been improving, but losses continue. The company spends heavily on research and expansion. This creates a classic high-risk, high-reward scenario. If IonQ successfully scales its technology and secures a leadership position, the upside could be enormous. But if technical progress slows or competitors gain an advantage, investors could face major volatility. Another important player is Rigetti Computing. Rigetti takes a different technological approach by focusing on superconducting qubits. These systems are known for speed, which could become important for handling complex quantum operations efficiently. Superconducting quantum systems are also backed by major industry interest because they integrate more naturally with existing semiconductor manufacturing processes. Rigetti's vision revolves heavily around hybrid computing. The company believes the future will involve quantum processors working alongside classical systems rather than replacing them entirely. This philosophy aligns with broader trends in artificial intelligence and cloud infrastructure. Hybrid systems could allow businesses to gradually adopt quantum capabilities without rebuilding their entire technological framework from scratch. But Rigetti faces challenges as well. Superconducting systems can struggle with higher error rates compared to trapped ion systems. Scaling quantum hardware while maintaining accuracy remains one of the company's biggest obstacles. Like many early-stage quantum firms, Rigetti also generates relatively limited revenue compared to its expenses. Investors betting on Rigetti are essentially betting on long-term execution. If the company succeeds technologically and financially, the rewards could be substantial. But emerging industries are unforgiving, and many companies fail before reaching profitability. Then there is D-Wave Systems, which occupies a unique position in the industry. Unlike many competitors focused entirely on future possibilities, D-Wave already generates commercial revenue. The company specializes in quantum annealing, a form of quantum computing designed specifically for optimization problems. Optimization is incredibly valuable because businesses constantly seek better ways to reduce costs, improve efficiency, and manage resources. D-Wave systems are already being used in industries such as logistics, manufacturing, transportation, and scheduling. This real-world adoption gives the company a practical advantage because it demonstrates immediate usefulness rather than purely theoretical potential. While some critics argue that quantum annealing is less versatile than gate-based quantum computing, D-Wave's commercial traction proves there is genuine demand for quantum-powered optimization. At the same time, D-Wave recognizes the importance of broader capabilities. The company has been expanding into gate-based quantum systems to compete more directly with other quantum firms. This dual approach creates an interesting balance between present-day applications and long-term technological ambition. For investors, D-Wave represents a different kind of opportunity compared to companies focused solely on future breakthroughs. One of the most important lessons about emerging industries is that predicting the ultimate winner is extremely difficult. During the early days of the internet, countless companies rose and fell. Some became global giants, while others disappeared completely. The same pattern will likely happen in quantum computing. Different technologies may dominate different applications. Trapped ions, superconducting systems, photonics, and quantum annealing could each serve unique purposes. Multiple winners may emerge simultaneously. This uncertainty is why diversification matters. Instead of trying to identify one perfect company, some investors spread exposure across multiple quantum-related firms. That strategy reduces the risk of betting everything on a single outcome, while still allowing participation in the overall growth of the industry. Emerging technologies are unpredictable, but broad exposure can help balance opportunity and risk. It is also important to understand that quantum computing does not exist in isolation. It connects with several other major technological trends shaping the future. Artificial intelligence, cloud computing, cybersecurity, advanced semiconductors, and quantum systems are increasingly intertwined. Progress in one area often accelerates progress in another. AI can optimize quantum algorithms. Quantum systems could dramatically improve machine learning capabilities. Cloud infrastructure allows global access to quantum hardware. These technologies are forming an interconnected ecosystem that may define the next era of innovation. One company often mentioned in discussions about this broader ecosystem is Nvidia. Nvidia is not primarily a quantum computing company, but its role in advanced computing infrastructure makes it highly relevant. GPUs already power much of the AI revolution, and they may also become essential for hybrid quantum classical systems. Quantum computers will still rely heavily on classical hardware for many operations, and companies building advanced computational infrastructure could benefit enormously from quantum growth. This broader perspective matters because technological revolutions rarely create value in only one category. The internet did not just benefit website companies. It transformed cloud computing, e-commerce, advertising, semiconductors, and social media. Similarly, quantum computing may create opportunities far beyond pure-play quantum firms. Companies involved in hardware manufacturing, cooling systems, cybersecurity, software development, and cloud infrastructure could all play critical roles in the ecosystem. Another critical factor is timing. Many investors struggle with emerging technologies because they either arrive too early and lose patience or arrive too late after valuations explode. Quantum computing requires a long-term mindset. This is not a space built for overnight success stories. Development cycles are long, technical challenges remain significant, and volatility will likely continue for years. Prices may swing dramatically based on research breakthroughs, government funding announcements, or investor speculation. That volatility can scare people away, but it is also part of every major technological shift. Early internet companies experienced enormous crashes before the industry matured. Artificial intelligence stocks went through hype cycles and skepticism before becoming mainstream. Emerging technologies often move in waves of excitement and disappointment before stabilizing into sustainable industries. Investors who understand that dynamic are usually better prepared emotionally and financially. The most valuable advantage in this space is not simply capital, it is understanding. The more you learn about quantum computing, the better equipped you become to evaluate opportunities realistically. Knowledge helps separate genuine progress from hype. It allows you to recognize which companies are building meaningful technology and which are relying mostly on marketing. In emerging industries, education can reduce risk more effectively than blind speculation. There is also a psychological element to all of this. Humans naturally underestimate technologies that seem confusing or unfamiliar. People dismissed the internet because they could not imagine its future applications. They underestimated smartphones because they viewed them through the lens of existing devices. Quantum computing faces a similar perception challenge today because it sounds complicated and abstract. Many assume it is too far away to matter, but technological change often happens gradually and then suddenly. By the time the average person fully understands a transformation, much of the opportunity has already passed.